Fibonacci trader is discussing an effective 50% Fibonacci retracement. A Fibonacci trader is discussing an effective 50% Fibonacci retracement. All right. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW at 24 traders. For Fibonacci trading, our website is www.dayprotraders.com. The title of this video is A Fibonacci Trader is discussing an effective 50% Fibonacci retracement. Let's get started. All right. So traders trade Fibonacci. Okay. Traders swear by the Fibonacci. Traders use Fibonacci clusters. Traders use the 61.8% Fibonacci retracement level, 38.2%, 78% Fibonacci retracement level. But in this tutorial, we want to focus on a high probability, a 50% Fibonacci retracement. At the end of this video, one will be able to recognize or to identify, okay, a high probability 50% Fibonacci retracement. When I start trading fast, experienced traders told me that trade your setup and know your setup. Now, I thought that I understood what they were saying, but finally, it becomes clear to me what they were talking about, okay? Trade your setup and know your setup, all right? So what the professional was saying to me is that in order to achieve a profitable trade, one must know, okay, a high probability trade setup or high probability trade setups, all right? And know how to trade, okay, those are high probability trade setup. So each professional trader knows his or her trading setup, and he or she knows how to trade those setup, okay? So the purpose of this video is to concentrate on a specific, okay, Fibonacci trading setup, and we want to know exactly how we trade it to avoid a trading mistake or investment errors, okay? So the Fibonacci, what is the 50% Fibonacci retracement level for new traders? So experienced trader, you can step aside and let new trader work this part. So price, you can see that the price went up from here all the way up here. So price went up from A to B, or price goes down from A to B. And then for one reason, the price pulled back to the middle line of the previous move. So the price went here from A to B. The middle line of this move from here to here is the 50% Fibonacci retracement level, okay? It is also a psychological price level. What usually takes place, okay? The 50% Fibonacci retracement level divides the price move into two. So for instance, if the price goes up from here, okay, to here, all right, we draw the middle line, which is the 50% Fibonacci retracement level, okay? If the price finds support above the 50% level, it is bullish. But if the price D below the 50% level and the final resistance there, professional will continue to sell the stock because the 50% Fibonacci retracement level is a psychological level. It's a thin, very thin, okay, dividing line between a bullish zone and a bearish zone. So above the 50% Fibonacci retracement level, we have the bullish zone in an uptrend, all right? And below the 50% Fibonacci retracement level, we have, okay, a bearish zone, all right? In a downtrend, the same strategy is true. So price goes down from A to B. We draw the median line, which is the 50% Fibonacci retracement level of the prior move. So this is the prior move from A to B. The price went down. We draw the 50% Fibonacci retracement level. If the price, the final resistance on the edge of or somewhere near the 50% Fibonacci retracement zone, trader will continue to sell. So below the 50% Fibonacci retracement level is the bearish zone, and above the 50% Fibonacci retracement level is the bullish zone. So if the price goes down from A to B, and then suddenly it goes above the 50% level, and then find support, the bulls will, the bearish trader that was selling it before will stop selling it. They will close their trade because it's a psychological price level. By closing a bearish trade, one must buy, okay, the stock or the financial instrument, and a new bullish trader that are coming to the market after the price breaks above a retest it also are buying, creating what we call a surge in trading volume. Pay attention here, you see, it's a beautiful surge in trading volume. You see here, the price was going normally before, now we see boom, 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 it started. There's a surge in trading volume, a big surge in trading volume, which means an increase in trading activity, all right? So, very, very important for traders to understand the 50% Fibonacci retracement level is dividing the previous price move into two zones, bullish zone above and bearish zone below. It makes sense? Another thing I want to say to traders before we continue with this discussion about a Fibonacci trader is discussing an effective 50% Fibonacci retracement level. What I've said to traders before, which I want you to click, all right? Get it right, okay? Shake yourself, move, all right? All right? So, what do we see? All right? So, price goes out from A to B and then pull back near the 50% level. If the 50% level is converted, it is a true, okay, support level, what are we likely to see? Now, remember this. Bullish chart pattern very often are formed on or near a valid support level. You can write it, okay, on your computer. You can tattoo that on your hand. All right, don't do that. All right, this is to say to you that it's so important. Bullish chart pattern are likely to appear on or near a valid support level. Now, the opposite, now, how do we say this? The reciprocal is also true. When we see a bullish chart pattern, we can now go and see whether this is happening on or near a valid support level. The opposite is also true. Bearish chart pattern very often will form on or near a resistance zone. All right? Now we can do the reciprocal. Am I speaking a proper English to you, or am I speaking French? Okay. Now, all right, you know this sign, okay? For those who have done a bit of math, okay? What I mean by reciprocal, it goes once to the left. It can also go in the left side. So there is a sign that we use in maths, okay, to show that it's reciprocal, okay? So we say that bearish chart pattern are often, okay, form on or near. This is the sign of reciprocal. On or near, okay, a resistance zone. So what we mean by the reciprocal is also true. When we see a bearish chart patterns, all right, whether it's a Fibonacci bearish chart pattern, area wave bearish chart pattern, normal, ordinary bearish chart pattern, all right, we will now go and check whether these bearish chart patterns are appearing on or near a resistance zone. So either we know that this is a key level or a key resistance zone, and now we are looking for bearish chart pattern or bullish chart pattern to form on or near that level, okay? Or the first thing that we recognize is the pattern. Now we want to check whether it is at a valid resistance level or a valid support level. To the left and also to the right. Reciprocal, okay? It makes sense? So, the strategy that we are discussing, so price went up from A to B and then pulled back, okay, near the 50%. You can see here, I draw my Fibonacci retracement level. So, I want to draw it here. Some traders are very new, so we need to pay attention to those traders also, because we don't want to assume that everybody understands these things. So, we want to tell traders, repeat a bit, okay? So price went up from A to B. We click on the Fibonacci retracement line. This is the Fibonacci retracement line. I'm using a trading software that is called TC2000, all excellent trading software. And then we start drawing from the starting point of the price move to where the price has ended. It went up from here to here. And then we are looking here. If you look carefully, I have here the 50% Fibonacci retracement level. This is the green line here, the green line. Can you see that green line? Okay, all right. All right, it makes sense? That's the 50% Fibonacci retracement level, okay? So, talking about a Fibonacci trader discussing an effective 50% Fibonacci retracement level. The effective 50% Fibonacci retracement level that we are talking about, remember what I said to you, bullish chart pattern will appear on here, a valid support level, bearish chart pattern will appear on here, a valid resistance level. Because these Fibonacci levels are not magic level, but they are key levels. They reveal to us sometimes obvious support and resistance level, sometimes hidden support and resistance level. All right, so because the 50% Fibonacci retracement level is a key level, if the price goes up fast before pulling back near that level, what are we looking for? You must know it now. We are looking for a bullish chart pattern. Now, if the price went down from A to B and rally up near the 50% level, what are we looking for? We are looking for bearish chart pattern. So, if you remember that, okay. That's it. That's the most important in this video, okay? So the most effective 50% Fibonacci retracement level, I want to remove my previous drawing and I want to make it very beautiful here, okay? I'll draw it. I hope you like my drawings, all right? I want to show you on this chart, okay? I want to draw it beautifully on my chart. Stay with me as I'm trying to clear my previous drawing so that we don't have too much mess here. All right. Okay, two more left. That's it, done. Okay. The first, okay, effective 50% Fibonacci retracement level is the bullish, okay, 50% Fibonacci retracement level, when the price we'll go out from A to B and then pull back nearly 50% Fibonacci retracement level and will form my favorite bullish chart pattern, the double bottom chart pattern. Now, trader may say to me, George, is that your best okay, bullish chart pattern? It is, because the double bottom pattern is a validation of a support level. So we have a key level, which is the 50% Fibonacci retracement level. And now we have a price itself, the number one indicator, confirming to us that this 50% level is a valid support level, price forming a beautiful double bottom chart pattern. As I explained to traders, anytime I'm talking about double bottom pattern, I say to traders that the double bottom pattern is not cooked or is not ready, so to speak, until the price breaks above the nut. This is the nut here. All right? So, an effective 50% Fibonacci retracement trading setup is a double bottom chart pattern that is formed on near the 50% Fibonacci retracement level. Now, before you run away, stay with us. I'll show you here on this chart. So we see here we have IBM stock on a monthly chart. The stock went up from 1994, okay, to 1999, and then the price pulled back gently, slowly, but gradually for almost 2 years. It slowly but gradually touches the 50% Fibonacci retracement level right here. In fact, it did below it. I will talk about that later. This is, you will see that very often. This is nice. If it did below it, don't be afraid. I will talk about it. So it did below and turn around. This is a beautiful thing. If you see the price doing that, let me show you this, okay? If you see this, a key level, okay? Price did something like this. Okay, just went a little bit gently below it. You see, so it was going up fast, okay? You want to see it going up fast, but suddenly the price did below a very important key level. Everybody say, oops, I told you that this is a valid support level. And then slowly the price returned back above it. This is very, very bullish. Price turns around itself. Okay? It's beautiful. So the same thing is true. You see here, price is going down, okay? So price was going down fast. This is very, very important condition. Price was going down fast, okay? And now, slowly, the price is rallying up, okay? People say, oh, this is a very important resistance level. But for one reason or another, the price went above it just a bit. But now, to everybody's surprise, it comes back down below it nicely. Catch it on the edge here. It's telling itself, it's telling you that I'm going back down. Okay, you get it now. So here we are, stock that went off and then pulled back near the 50% Fibonacci retracement level, the green line. It's the green line here, okay? This one did below a little bit, okay? What are we looking for? Bullish chart pattern, okay? Because it was going up first. If it was going down before, we look for bearish chart pattern. It was going up first. So we don't want to find the market. The momentum is bullish, price touching the 50% level. You may decide and wait because it touches for the first time very often. Now we need to clarify this now before it's too late. Very often what usually takes place, price going up from A to B, price pull back to the 50%, people will jump on it and buy it. And sometimes they lose. Like these people here, they may get into trouble. You can just relax and say, okay, we want to see bullish chart pattern. I'm not going to force it yet. I don't know whether it's going to continue to go up. Sometimes you will touch it like this and go up. But to avoid, okay, surprises, it's better to wait and see validation of the 50% level as a valid support level. And the best chart pattern for the validation of a support level is the double bottom pattern right here. So you may say to me, George, it doesn't work all the time. Yes, no trading strategy will work all the time, okay? If it can work 60% of the time, we can control the risk, okay? So the next step, what do we need to do? So when you see that, okay, a double bottom chart pattern or a bullish chart pattern on or near the 50% Fibonacci retracement level, there is a high chance that this is an effective 50% Fibonacci retracement level. How do we trade it? Okay. The next step, I don't want to talk too long, all right? I will recommend traders to watch the video that we call What is a Multiple Time Frame Trading Method by 24 Stock Trader. Digit 2, digit 4, Stock Trader. That's a YouTube channel you will look for, okay? What is a multiple time frame trading method by 24 Stock Trader. When I explain to traders then what is a top-down trading method, what is a multiple time frame trading method, I will also remember to put it in a description area, okay? Let me write it here, okay? So I don't forget, okay? All right? All right, so the next step, so this is now a bullish trade setup, okay, from a double bottom. But remember what I said, the double bottom pattern is not yet completed until we go above the nut. Don't forget that, above the nut. But this is the best place to enter. But if you are entering here, you have to know that there's a resistance ahead, which is the nut here. So if it reaches this level, you may secure some gain. All right, so I'll move your stop loss to break even and see what's going to happen. Okay, so price from a double bottom chart pattern is a trading setup. You can see this, okay, on the weekly chart. All right, so you do weekly chart for the trading setup, 4-hour chart for the signal, or 2-hour chart. You can use 4-hour or 2-hour chart for the signal when you are using the weekly chart for your trading setup. And then you will use 15-minute chart for your entry. For the entry, we can zoom into it more. Go and watch the video that we call, okay, what is a multiple time frame trading method by 24 Stock Trader, okay? So here, this is a trading setup of a 50% Fibonacci retracement level, okay? A bullish chart pattern that is formed on or near the 50% Fibonacci retracement level is an effective 50% Fibonacci retracement level. Now, the next step is to use a top-down trading method. Another thing that we do, we see a trading setup, we must validate the trading setup. How do we validate the trading setup? Once again, watch that video that I recommend to you now. Watch it and you understand how to validate a trading setup. Okay, so I don't want to talk about validation of trading setup in this video. I will refer you to that video. I will remember to put in the description area. Watch the full length of that video so you may know how to apply a top-down trading method. So we see the trading setup, we validate the trading setup, we use the top-down trading method, the setup, the signal, and the low-risk entry point. We can see a trading setup, okay, on a 4-hour chart. We combine the 4-hour chart, okay, we can combine the 4-hour chart, 30-minute chart, and 5-minute chart. We can do that. We can combine the 4-hour chart, the 15-minute chart, and the 5-minute chart, okay? multiple time frame trading method. When we are applying a multiple time frame trading method, the key element is that we want to see first a valid trading setup. That's why we want to validate the trading setup first. A solid or an effective, a reliable, a high probability trading setup. That's why you remember what I said at the beginning of this video. Know your setup and trade your setup. So there are some setups that traders are trading all the time, and this is one of them that I trade myself. Okay, a price forming a bullish chart pattern, especially a double bottom pattern on or near the 50% Fibonacci retracement level. Okay, now when we see that, we validate the trade setup, the trading setup, and then we apply top-down trading method. Do not skip the steps, okay? Do not skip the step. You know, sometimes you rush into trade, and now the next step, you are praying to God to help you that you are out of the trade, okay? Because you have been a little bit impatient, or you skip some steps. You don't want to skip steps. You just want to be patient. Like a hunter, you wait. Like a cat, you breathe in, you breathe out, you wait gently. When it's truly ready, you jump into it. If the water is too hot, come out. What do I mean by water is too hot? When the signal fails, you must come out, okay? You must come out, okay? And then sometimes you enter a trade, the signal fails, you are out, okay? Cut it, okay? Then again, you notice that, okay, game on. It's not finished yet. The game is still on. Okay, you re-enter, okay? All right? It makes sense? So a reliable 50% Fibonacci retracement level is a double bottom chart pattern. As you can see here, we have a double bottom chart pattern, but the price did not go up straight away. Are you with me? See here, it went up a bit. Didn't break above the nut, and then it come back down again to form a triple bottom pattern here. So you may say, George, this is a mambo jumbo trading method. What's going on? The system is not working. Be patient, okay? Be patient. As always, you learn something new, okay? Practice, okay? Until, okay, you master it gently, okay? Especially if you are a new trader, okay? The next thing that I want to tell traders, so we see the trading setup, the 50% Fibonacci retracement level with a double bottom chart pattern after the price went up, very important, all right? Now, we validate the trading setup, okay? All right, you've done it, okay? You tick that box, and now you want to apply a top-down trading method, which means you see the setup. Now you go to the signal time frame. You wait for the signal. Okay, signal is fired. Okay, now you are waiting to enter the trade. When the signal is fired, okay, and you are about to enter the trade, my friend, promise me that you will not forget what I'm going to say now. Okay, if the signal is fired, okay, it's not yet the time to enter the trade. Now you are looking for the low risk entry point. What I'm going to say here is so important, okay? When you're about to enter the trade, check what we call the market environment. The market environment will decide whether you will have a profitable trade. Sometimes you may have a reliable trading setup, but the market environment does not allow you to trade it, or the market environment may convert that trade into a losing trade, okay? So suppose the market is bearish one day, all right, and everybody is selling, and you are trading a bullish trade setup. Maybe you are the only one trading it, okay? You are the only one bullish that day, okay? So do not be the only one bullish. Be bullish with the majority of market traders and be bearish with the majority of market traders, okay? So the market environment is so important. Look here. We are on the monthly chart for IBM stock, International Business Machine Corporation, EPIC IBM, okay, Indian Bravo Mike, listed on the Dow Jones Index, okay? It is, in fact, a market leader for the Dow Jones Index, okay? So here we are, you see here, we have the first double bottom pattern somewhere here in 2005, okay? So it's not a bad time. The market was going up, but was not very bullish. It was not also bearish, okay? All right, but from 2006, somewhere mid 2006, the market became a little bit bearish, where we have the triple bottom here. What has happened here? This stock is very bullish. IBM stock was very bullish that time, because you can see that the stock market during that time, the Dow Jones Index, the NASDAQ 100, or the major indices, from 2007 to 2008, they were bearish. But look, IBM was, back in the trend, was going up instead. So though the market environment here, this is an exception to the rules, the market environment was bearish during this time, IBM manages to go up, which means probably the fundamental was very strong that time for IBM, and the market decided to buy IBM. But the point I want to stress on here is that pay attention to the market environment. If you see a bullish trade setup and the market environment is bearish, in my view, take a conservative approach, a cautious approach. You may decide not to trade it. Here you can see that it worked beautifully. The price went up, but it is a bit risky here because though we have a bullish trade setup, the bullish trade setup where we have the triple bottom now here, finally was during a bearish season, 2007, 2008. The general market was bearish, Dow Jones was bearish, but you can see that, IBM was going up. This is an exception to the rule, all right? It makes sense? Now pay attention here. Finally, again, look, how many times the price touch it? So we have the first double bottom here. You may say, George, what are you talking about? It went up a bit. Look, yeah, I'm losing money. Okay, great. Then we have a triple bottom, and then you will say, okay, George, thank you so much. Okay, and then it went up back. Here was an exception, because the market itself was bearish. Look, in 2009, the global market became bullish. The Dow Jones start going up, the S&P 500 going up, all the major indices start going up. We have, in fact, 4 bottom here, 4 lows, 5 retest, retest, retest. Each time is finding a support, except here for the first time. That's why I said to you, the first time it's touching it can be risky. It did below it before coming out. After that, it's finding a support each time. Here again, it found a support. Here again, it dipped a bit, but not too much. But it found a support each time it's touching it. Validation of the 50% level as a valid support level. This is an effective 50% Fibonacci retracement level. Here, the market environment. So remember what we have done. We identify a trading setup. We go to the higher time frame to validate the trading setup. We apply a top-down trading system, trading method, or a top-down trading method, a multiple time frame trading method. When a signal is fired, we check the market environment. The market environment in 2009 was reasonable. The Federal Reserve started printing the dollar. All this money that were printed were invested in the stock market. The stock market started going up. It's an excellent environment. The bearish season has ended. Finally, IBM also complied with the market, start going down. You see, it was resilient here. But finally, start going down to pull back to retest again the 50% Fibonacci retracement level. All right? So all verification being done. The most important is that the market environment also was suitable for us. Whether we are day trader, swing trader, an investor, at that point in time, we must give priority to bullish signals. All right? The signal is fired, we look for, a low risk entry point. I have also recorded a video recently talking about the 4 high probability trade setup one must know at George Trio YouTube channel. Check it out. A double bottom chart pattern followed by a higher low is what? A high probability trade setup. A double top chart pattern followed by a lower high is a high probability trade setup. Check that video at George Trio channel. 4 high probability trade setups one must know. So here we see that it retests the 50% level, 50% level, 50% level, bullish chart pattern being formed on or near the 50% retracement level. Market environment is good. We apply top-down trading method. But here we have a beta signal. Look at this. A higher low after multiple bottoms. Are you waiting for permission? All right. Nice. Nice. Look at that. Boom, 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 boom. Up. All right. I don't think I need to clarify to traders before we close this video. I've been talking to you now for 29 minutes. When above my normal 20 minutes. You will very often, you will notice after the price validates the key level, look at this level. You'll see a surge in trading volume. Look at this. First double bottom pattern on or near the 50% level. So talking about the validation of the 50% or the validation of the effective 50% Fibonacci retracement level. We check the higher time frame. As I told you, I recommend a video. Check it out to know how to validate trading setup. Another validation that we can do is to check the trading volume very often you'll see a surge in trading volume. So we have a normal trading volume, and now boom, a surge in trading volume while the price was retesting the 50% Fibonacci retracement level. But look, after this surge in trading volume, as I told you, the market is that time was quite high, but was not as bullish as it was before. Market environment was not very good. We are coming to the end of a bullish season, and a bearish season is knocking at the door. Okay, so price went up a bit, though we have this. Now pull back again to form another bottom again here. All right, double bottom. See, surge in trading volume followed by a double bottom pattern is also a high probability trade setup. A surge in trading volume followed by a bullish chart pattern is a high probability trade setup. A surge in trading volume followed by a bearish chart pattern is a high probability trade setup. A double bottom chart pattern followed by a higher low is a high probability trade setup. A double top chart pattern followed by a lower high is a high probability trade setup. Okay, so we see a surge in trading volume at the point. This is another validation of the 50% level as a valid support level. Surge in trading volume. Here in 2009, it went a bit too far. You see that it's a huge surge in trading volume again, confirming to us that there is an increase in trading volume, an increase in trading activity. Orders to buy and sell has increased here. And now, if you are waiting for confirmation of this trading volume, here it is, a higher low that has formed, that is formed after a surge in trading volume. And not only that, we have a double bottom or multiple bottom at a 50% Fibonacci retracement level. Have I make sense, my friend? Does it make sense to you? Okay, all right, great stuff, all right. So what do we care about? So let's go back again. We are looking for what? Bullish chart pattern on here, valid support level. This is the stable data you must understand. Bullish chart pattern very often will form on here, valid support level. Bearish chart pattern will form on here, resistance level, all right? We talk about that this relationship is reciprocal. So sometimes we see the pattern first, then we want to check whether it's happening at the key level, okay? So when we see that, we must validate the trading setup. Very often traders see a chart pattern, they say this is a setup. So they place a trade, and the trade will fail. But because they skip, you remember what I said? Don't skip any step. Thoroughly, like an expert, validate the setup, and then apply a top-down trading method. When a signal is fired, check the market environment. If the market environment is not suitable, as you have seen here, a top-down trading method will allow you to navigate through the market. But you know that there is more risk in this case, so you want to be gently, all right? So this is a technical analysis, okay? As always, this part, what I'm going to say now, some traders will switch off straight away. They say, we can also add a fundamental analysis. Some traders will say, oh, just shut up for God's sake. It's very important to apply, a fundamental analysis, at least perform what we call Google Finance Assist Test. Check that video at George Trio YouTube channel. What is Google Finance Assist Test by George Trio? You can watch that video when I'm talking blah, 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 comparing the current asset, total current asset on the balance sheet to the current total liability, all right? See the trend of, is the current asset going up or is it going down? Is the current liability going down or is it going up, all right? So the normal trend for a bullish stock is the current asset should be going up or at least remain stable. All right, and we want to see a current liability going down or remain stable. All right, bearish stock very often that will fail the Google Finance Assist test. You will see that the current asset is going down almost. It's going down almost. All right, and we will see that current liability is going up big time. They are under pressure. To survive. Talking about a medium term. All right. So apart from that, you check other things. Is the stock cheap? Compared to other stock in that sector, and just go on YouTube, all right, excellent platform, and check video about fundamental analysis and do a bit of fundamental analysis if you are an investor. So here you can see that from 2009 IBM stock resumed a bullish trend beautifully and went up big time. Went up big time. went up big time, all right? So when you see the 50% Fibonacci retracement level or any other Fibonacci retracement level, in fact, okay, price pull back near Fibonacci retracement level. If the price went up before, if the prior move is bullish and it pull back near either 61.8% or 71.8%, apply the same method. We want to see bullish chart pattern. We want to validate the trade setup. We want to check the market environment, and we want to use a top-down trading method without ignoring the fundamental analysis. It makes sense? It makes sense. The opposite is also true in a downtrend. When the price goes down, okay, from A to B, we want to see formed, okay, on here, the 50% Fibonacci retracement level, a double top chart pattern. We will apply the same, we will follow the same step. Double top, price went down from A to B, and then rally to the 50% Fibonacci retracement level and form a double top. It's a bearish chart pattern. Remember, the double top is not completed until the price finds resistance below the nut. So if you are taking it down from here, we want to use a top-down trading method and control the risk and know that there is another challenge here that the price must break the nut before the bearish momentum will become strong. So a price rally up to the 50% Fibonacci retracement level after a bearish move, forming a double top chart pattern. This is an effective or a reliable or a high probability 50% Fibonacci retracement. All right. We will now go to, if you see this, for instance, on the 4-hour chart as a day trader, you go to the daily chart or weekly chart to validate the stress setup, okay? You may check also the trading volume if you are trading stock, all right? The validation of the trading setup is critical after we have finished to validate the trading setup. So because we say, okay, we have a valid trade setup. We know our setup. We know how to trade it. Now we want to apply a top-down trading method. The setup, okay? All right, on the 4-hour chart, 30-minute chart for the signal or 50-minute chart for the signal, and then we use, okay, either 5-minute or 3-minute for the low-risk entry point. When the signal is fired, now we check the market environment. As a day trader, what time of the day? Market is open, the first 2 hours is the best time for day trading, okay? Don't day trade during the gap period, all right? Or the last hour of the market can be also good for trading very fast for day trading purposes. All right. Swing trader, myself, as I said to trader before, swing trading, I prefer to enter my swing trade on Tuesdays, not on Mondays, because we want to see what the market will do on the first day, giving us the first indication for the week before we will enter our swing trade on Tuesday. You are swing trading. If you do not pay attention to the economy news, you may be going round. All right, economy news, fundamental, if you are swing trading. Otherwise, if you are using technical alone, you are just a little bit gambling. It makes sense? All right. So this is the end of this video. I promise that I will talk about this. I know you are, you say, oh, George, you say you're going to talk about this one when it did below a little bit the 50% level. Now, traders usually call the zone between the 50% level and the 61.8% level as a sweet spot zone. So here, what we see here, that's what we call the price deep into the sweet spot zone. But as I told you before, we wanted to dip a little bit below it and to go back above it. This is a trading setup. Okay, so if you want to buy it straight away, allow it to dip below and to come back here. This is your trading setup. So here you see it dip below and come up. This candle here on the monthly chart is closed. Now we apply a top-down trading method. Okay, all right. Okay, all right. I've said enough. So if you like this video, please give us the thumbs up. Okay, if you dislike it, feel free to give us the thumbs down. Okay, very important. Give us the thumbs down. If you don't like the video, give us the thumbs down. If okay, you have any suggestion, okay, put in the comment section. Any question, put in the comment section. What I do, okay, I may not reply to you directly, but I record another video to answer the question that traders are asking in the comment section. All right. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. So if you love many of our videos on this channel, okay, now it is your chance, okay, to subscribe to our channel so you don't miss any of our tutorial. I'll put a link in the description section where you can quickly subscribe to our channels. Okay. This is the end of this video about a Fibonacci trader is discussing an effective 50% Fibonacci retracement level. I would like to thank traders for watching this video, and I hope you have learned something from this video and will put into use to make excellent day trading, swing trading, and investment decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.